Hi everybody, this is Ospreyeye from mychartcoach.com, and we are looking at ticker symbol HK. There was a nice bounce today following, let's see here, there was following 5 red candles in a row. There was this big bounce off of low of day. As you can see, the open was at 33.1, which was well below the previous close. So there was this gap down open, and then the share price ran. It traded slightly lower than the open. There's a very small wick on today's candle, but then the share price ran past the midpoint of the previous candle, the candle on the 7th. So once the share price broke that level and then closed past the midpoint of this red candle, that set up that created the bullish piercing line reversal pattern. So yeah, so you've got this nice reversal pattern. There was very big recent volume, as you can see here, these giant volume bars. So this was so there's big loading going on the 7th. Big there's obviously, there was dumping, but there's also bottom players stepping into the market. You can see the lower wick here shows loading off of low of day levels on the 7th, and that was followed by this big huge move, very strong for most of the day until the close. Um, yeah, as you can see, this is the 50, 100, and 200 day daily chart. And so the 50-day moving average is up here at 72. And that's the first simple moving average resistance level on this chart. Let's look at the next daily chart. This chart is a daily chart, and it shows the Bollinger Bands and EMAs 4 and 8. And as you can see, this is the bullish piercing line. And the close today was right at lower Bollinger Band, the lower Bollinger Band support level, which is at 43. So as you can see, the open was well below the lower Bollinger Band. The close on the 7th was also well below the lower Bollinger Band. So that was signaling. As you can see here, there was these 4 red candles formed in a row with the close below the lower Bollinger Band last Friday, and then on the 7th there was this huge drop well below the lower Bollinger Band, and that was signaling that the move was getting very frothy to the downside. And then you saw this big volume spike, so that's signaling, keep an eye out for the bounce. And then that's what happened. There was good follow through on on uh, on Tuesday, and this bullish reversal pattern formed. So the key level to break is going to be EMA 4 at 45. As you can see, the upper wick broke that level temporarily. So bulls, you want to see a close above that level, and that would put EMA 8 at 50 on deck. As this chart shows, EMA 8 has been resistance. The last close above that level was over here on November 24th. That's when the last time the middle Bollinger Band was tested. The downtrend, this trend will continue. The downtrend will continue until the middle Bollinger Band at 58 turns into support. As you can see back here on this candle here on October 5th, there was this close above the middle Bollinger Band after trading below, and then an uptrend started. The middle Bollinger Band support level broke on this candle right here on the 26th, and this signaled the downside risk and the start of a new downtrend. And as you can see, there's this big downtrend. So right now, HK is trading in a downtrend. This was a dead cat bounce until the middle Bollinger Band, which is this level right here, currently at 58. Until that level breaks and turns into support, bounces for downtrending stocks are just short cover rallies. So until a new uptrend starts, this is just a short cover rally, and the key is the EMA 4 and EMA 8 are the key levels to break, and EMA 8 is the sell zone unless there's a close above that level. And then if you see that level break and there's a close above that, then that will put the middle Bollinger Band on deck. But as you can see on this chart, it has been major resistance, and it will be the key level to break. Look up here at Fasto. Fasto had a bull cross and is now above 20, above the 20 oversold line. As you can see, it's at a current resistance level. So there's been you know, resistance multiple times, one, two, you know, three, four. There's been multiple times where Fasto has been unable to break through this range, this 30 to 40 range. Bulls, you want to see Fasto above 50, so you want to see this 50 level break, and uh, uh, Fasto be between 50 and 80. You know, back up in the bull zone, back up here, or even up in the above 80 overbought power zone. And so back here, if you look up here, RSI was below 30 and is now above the oversold line. So 30 is oversold on Fasto, or I mean on RSI. And then if you look down here at MACD is trending down. It was pinched right here. This is pinched, and then it broke out down to the downside. So keep an eye out for MACD. Bulls, you'd like to see the green line cross the red line to the upside. Okay, let's look at the next chart. The next chart is a 15-minute chart, and each candle on this chart represents 15 minutes of trading as opposed to 1 day of trading. This is a 2-day chart, and what this is showing is the break above the middle Bollinger Band. Let's see here. This candle right here, this was the bull flag. Okay, first, okay, you have candles forming below EMA's 4 and 8. You know, look at this candle right here. HK tried to break EMA 8 with this slightly close above, but failed. Candles continue to pull back, and then when you saw this candle right here, this was the candle that was telling you, okay, the chart is heating up. There was a 15-minute candle formed above EMA's 4 and 8. That was the first resistance level to break. And then when this candle formed, this was the green flag. When you get the first close above the middle Bollinger Band, that was telling you that a new uptrend might be starting. And that you know, there's this crazy candle right here. Not sure what happened. Looks like some people got lucky down here. But yeah, so a new uptrend started when this candle formed, and there was a break above the middle Bollinger Band, and then candles are riding EMA's 4 and 8. Not sure what happened here, but these are 4-price dojis. I mean, look at that trading. So so this must be a you know, thinly traded stock, because these are 4-price dojis. That means that the open and the close were equal, and they're usually a single trade. So these probably represent single trades. And there was a close. At the close here was a close below the middle Bollinger Band, and that's currently at 44. So that's the line in the sand here, bulls. You want to see candles forming back above the middle Bollinger Band, like over here in this run. If the candles start forming below the middle Bollinger Band, then you're looking at this type of move. So you don't want to see a new downtrend start. That could be the signal of a new downtrend. If you take a look at the Bollinger Bands right here, this purple line, this is the upper Bollinger Band, this is the lower Bollinger Band. As you can see, look how wide they were down here at 12. See, this is the lower Bollinger Band, this is the upper Bollinger Band. They were super wide, 12, 1 o'clock, and then they narrowed and got tighter and tighter and constricted during this period of consolidation, where there are these 4-price dojis at the same level, and that's really tightened the Bollinger Bands. So now the chart is wound tight. As you can see, the upper wick on this candle hit the upper Bollinger Band, and the lower wick almost hit the lower Bollinger Band. So what that's telling you is that this consolidation period is going to end, and either the share price is going to break the upper Bollinger Band, and the uptrend is going to continue, or there's going to be a new downtrend starting, and the lower Bollinger Band is going to break. But keep an eye on the 15-minute Bollinger Band chart into the at the open tomorrow. And then down here at MACD, there was a bearish crossover here at 3 o'clock. The green line crossed the red line to the downside. They are pinched right now. So bulls, you want to see the green line back above the red line, like over here, down, yeah, right here at 1 o'clock. You can see that. See, this is the bearish crossover right here, and then down here at 1 o'clock there was a bullish crossover. The green line crossed over to the red line, and that was signaling to you the chart was heating up and a big run followed. Now if you see the green line continue to head lower below the red line, that will be signaling to you the downside risk. And then this will be the last chart. This is another 15-minute chart, and what this is showing is this is a 5-day 15-minute chart. Each candle represents 15 minutes trading, and this shows you there was this break right here above the 50-day moving average, currently at 40 at 11 o'clock, and then the candles traded sideways, and the key now is going to be able to break the 100-day moving average at 46. A break above that's going to put the 200-day moving average on deck. Fail to break the 100-day moving average, and the 50-day moving average will be tested, will likely be tested, and that's going to be the key level to hold. If candles are forming above the 50-day moving average, that's going to signal more upside potential. If you see the 50-day moving average on the 15-minute chart turn into resistance, that's going to equal downside risk. Okay, thank you for viewing this chart. I hope that you view more charts of ours in the future. You can check us out at our YouTube channel at mychartcoach.com and also on our website at mychartcoach.com. Thank you.